Good morning. You're watching Market Cafe with me, Shriyanti Singh, and my co-anchor Snehi Shah. And over the course of the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar as well as how the Asian markets are faring as well. But first things first, let's begin with the international handover then. Snehi, what does it look like?
Well, absolutely, Shriyanti, looking good so far, at least for us. And let's take a look at what Wall Street did on Friday. And stock futures were flat on Sunday evening as Wall Street looks to build on another positive week. Now, Friday's moves, they came after the three major averages rose for the 13th week out of 14, powered by a stronger than expected January jobs report and solid earnings report from Microsoft as well as Meta platforms. Now, on Friday, the Dow Jones was up a nominal 0.3%, but the S&P 500 was up 1%, but the real winner was Nasdaq, up 1.7% based on all those tech results that came that the street was rather happy with. Now, the gains came even though the Federal Reserve Chair Jerome Powell said on Wednesday that the central bank would likely not be cutting any rates in March as some traders had been expected. So now this week is going to be full of a slate full of earnings then, including McDonald's on Monday and Ford on Tuesday. Now, traders will also be keeping an eye on the Middle East. Remember, the US has begun airstrikes in Iraq and Syria on Friday, so we will see how that geopolitical development also pans out. And National Security Advisor Jake Sullivan, he told reports that the US plans to make additional strikes against Iran-backed groups. So, well, we'll see how that pans out then. So, that's largely the handover coming in from the US. When we shift focus to the Europe then, largely doing well, not doing much. Stock 600 as flat as it could be on Friday. DAX was up 0.3%. FTSE almost 0.1% in the negative, but not doing much itself. CAC also rather flat, so not much to worry about when it comes from Europe. But yeah, well, all indices in the flat, and US, all of those indices in the green. Let's see how that pans out for us, Shriyanti. But with that, also take us through all the activity that's happening in the world of crude, given all of these geopolitical developments are just buzzing.
Absolutely. There's a lot happening, like you just pointed out, with oil prices. So when you look at oil prices on Friday, they fell by about 2% and also posted weekly losses. And this was after US jobs data shrank the odds of imminent interest rate cuts in the world's largest economy. And this could, of course, dampen crude demand. So that is something that we'll see playing out later. Faltering growth in China, as well as the possibility of some easing of tensions in the Middle East, also reduced prices. So when you look at Brent crude futures, they settle around that $77 a barrel mark, shedding 1.7%. When you look at US WTI as well, that settled around that $72 a barrel mark, a downtick of about 2% coming in for WTI. Both benchmarks lost roughly 7% on the week. High interest rates, which tend to dampen economic growth as well as oil demand in major economies like the United States and the Eurozone, appear to be here to stay in the near term. So when you see what the data is indicating, that showed US employers added far more jobs in January than expected, and that is reducing the chances of near-term Federal Reserve rate cuts. Concern over China's economic recovery, however, persisted, and this is with the IMF forecasting that the country's economic growth would slow to 4.6% this year and decline further in the medium term to about 3.5% in 2028. So that's something that we'll also be see play out in the oil markets as well. But the weekly loss for oil prices was already in motion, and this was after unsubstantiated reports of a long overdue ceasefire between Israel and Hamas caused prices to settle more than 2% lower. And this was on Thursday. A pause could ease political risk looming over Gulf and Red Sea shipping lanes, which are key for global energy flows. So let's see how this pans out for oil prices. But when you look at gold as well, gold prices slipped on Friday, and this was as the dollar as well as yields jumped following a strong US non-farm payrolls report, which created some uncertainty about whether the Federal Reserve might start cutting rates soon. So this is largely the action coming in for oil prices as well as gold prices.
Absolutely, and with that, let's also shift focus and take a look at all the important cues that you need to be keeping on your radar for today's trading day as well as for the rest of the week. And when we talk about today then, and let's talk about some data points to watch out for when it comes to our markets, the India HSBC Composite PMI as well as the Services PMI, so that's the manufacturing data that will be coming out today, so watch out for that. Shifting focus to the 8th of Feb, we've got the all-important MPC rate decision. We'll be watching out on the RBI's action when it comes to rates. The street is expecting the rates to be rather stable well, but let's see what happens. And what will be key to watch is the commentary that comes in from the RBI top boss Shaktikanta Das. Shifting focus, let's go ahead and let's take a look at what's happening globally. Today from the US, you have the services PMI as well as non-manufacturing PMI data coming, 7th Feb trade data, and for the 8th of Feb, you've got the wholesale inventories as well as the initial jobless claims and consumer credit data coming in. From China today, you've got the China Caixin composite PMI as well as services PMI, and on the 7th of Feb, you've got the forex reserve data as well. 8th of Feb, then for China, you've got PPI as well as CPI. Now let's shift focus back home and talk about some earnings today. From the Nifty pack, you have Bharti Airtel that'll be reporting its quarter 3 numbers. Non-Nifty pack, a whole host of companies, the likes of GIC Housing Finance, Kansai Nerolac, Alembic Pharma, Avanti Feeds, BSC, Fusion Micro, Ashok Leyland, Sundaram Finance, a whole host of companies. So watch out for all of these counters in today's trading session. And lastly, let's talk about some corporate action to watch out for today. Today is the last day to be eligible for the dividend of CG Power, Coforge, Mahanagar Gas, Sona BLW and Tanla Platforms. Also the last day to be eligible for the income distribution of the IRB InvIT Fund. So watch out for all of these counters in today's trading session.
Absolutely. And another thing that is in focus is, of course, commentary coming in from Fed Chair Jerome Powell. Now, the central bank chief pledged to proceed with caution with respect to rate cuts this year, defying market expectations. He said that the central bank will move at a considerably slower pace. He, however, did express confidence in the economy and promised that he won't be swayed by this year's presidential election. So that's the word coming in from the Fed.
Alright, and with that, let's shift focus and let's talk about Apple, because Apple's biggest iPhone assembler and world's largest contract electronics manufacturer expects improvement in business this year versus the last year. Now, the company, however, has flagged that it is facing a shortage of AI servers. This we're talking about Foxconn, of course, and demand for AI servers will be, of course, good, but global economic certainty given geopolitical problems will affect consumer product demand, he added.
And Donald Trump is mulling a 60% or higher tariff on Chinese imports. The former US president plans to escalate the US-China trade war, one that he launched during his first term as president, if he's re-elected to the office again in November.
And details of a $118 billion bipartisan aid proposal released by the US Senate for Ukraine, Israel and the southern US border. The proposal also includes smaller pockets of funding for humanitarian assistance in war-torn regions and defense operations in the Red Sea as well as Taiwan. The bill will likely meet stark opposition from House Republicans who proposed their own Israel-only funding package earlier in the weekend.
Well, with this, we're timed out on this segment, but stay tuned because we'll tell you how the Asian markets are faring on the other side.
Hi there, welcome back. You're still tuned into Market Cafe on ET Now. Let's take a look at how the Asian markets are faring as we speak. And remember, China, Taiwan, South Korea, Singapore and Hong Kong will all see shortened trading weeks as the Lunar New Year approaches. So now let's talk about the Asian markets overall. And Asia markets kick-started this holiday shortened week largely lower after the US Federal Chair Jerome Powell said that the central bank will proceed carefully with interest rate cuts this year. He added that the Fed will likely move at a considerably slower pace than the market expects. So on the back of this, most major benchmarks fell except Japan, because you can see Nikkei on your screen. Nikkei is up almost 0.5%, a 160-point uptick coming in for Nikkei. And on Monday, which is today now, private surveys on service sector activity will be released from China. So on the back of that, you can see Hang Seng is down 0.5%, opposite of what Nikkei is doing. And let's also have Shanghai on the screen. Shanghai, a solid 1% cut coming in for Shanghai as well. Both of those indices in the red as we speak. It was dragged by losses in heavyweights, Samsung Electronics, and it continues to languish in the red, 1.6% in the red as we speak as of now as well. And in Australia, the ASX 200 traded 1% lower in the morning. It retreated from its all-time high that it set on Friday. Continues to be at those levels, 1% downtick coming in for ASX 200 as well. So while other than Nikkei, largely all the Asian indices are in the red. Let's see if those trades reverse, if those moves reverse. And let's talk about what we did last week when it comes to Nifty. Remember, we did manage to touch a record high level, managing to breach 22,100. Now, we did retreat from those levels. On Friday, we managed to close at 21,853, implied at 21,910, not implying a rather positive positive start for us, rather flat if I could say that. But yeah, Shreyansi, let's see how that pans out for us this morning.
Absolutely. And as we slip into news for the hearing impaired, here's a quick programming note. ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on the 5th of every month. Join ET Now Swadesh, as well as Sundaram Mutual today to learn how you can build your financial future with an SIP in mutual funds.
Hi there, welcome back. You're still tuned into Market Cafe and you're watching ET Now. Now, as we are in the thick of earnings season, you've got a nifty company, that's Bharti Airtel, that's set to report its Q3 numbers today. So now, will the telecom company see a steady quarter or will the growth be muted? Somit is joining in with what the street is penciling in and what we can expect from this telecom major's numbers. Good morning, Somit. Take it away.
Well, as per street expectations, Bharti Airtel's numbers on a sequential basis are expected to report a muted set of growth. Revenues are expected to be higher by around 3% on a consolidated basis. EBITDA is expected to be higher by around 2%. EBITDA margins are expected to come in at close to 52.1%, while the net profit would see a sharper jump because of some exceptional items as per the analyst expectations. Now, the India mobile business is the key number which drives Bharti Airtel share prices, and in that front, if you see, the India mobile revenue is expected to be higher by around 2.6%. India mobile EBITDA is expected to be higher by around 3%. Subscriber base is expected to grow to around 34.54 crore, and ARPU number is a key number, is expected to be higher by around 2% to close to 206.5 rupees per user per month for Bharti Airtel. Now, on a consolidated basis, if you see, steady quarter for the India business, but a muted quarter for the Africa business, and hence we are seeing lower EBITDA growth of around 1.7%. Now, the Africa business accounts for nearly 27% of Bharti Airtel's consolidated operations, and the numbers are expected to be impacted owing to currency devaluation. Apart from that, the India mobile business, if you see, the ARPU growth is largely on the back of more 4G subscriber addition and increasing postpaid penetration in the country. Along with that, the home broadband segment, if you see, that is expected to report a robust set of numbers on the back of strong quarterly net subscriber addition. Healthy growth is expected from the enterprise business, while the DTH business is expected to report a muted set of numbers. Now, the key things to watch out for from Bharti Airtel numbers would be their capital expenditure plans for the next financial year, that is FY25, the commentary on mobile tariff hike, any what has been the response to Jio Bharat phones, any market share shifts that they're seeing, and what are the commentary coming in when it comes to 5G monetization, and the emerging trends of the initial 5G rollout would be important to track from Bharti Airtel conference call.
Absolutely. Thanks, Somit, for that update on Bharti Airtel. But SBI's third quarter results failed to meet street estimates, with net interest income and profit less than expected, largely due to an exceptional loss of 7,000 crore rupees. Gaurav is standing by with the key takeaways. Gaurav, seems like the asset quality is the only silver lining.
Yeah, so when we talk about the results of SBI, we have seen that the net interest income increased by almost by 4.5% in this quarter on a YY basis. PPOP was down almost by 22.5%, but actually it was fairly in line with what Street was expecting, because we was expected to see wage rate revision in this quarter. Talking about the profitability after tax, which was down almost by 35.5%, and this was only because of the one-time expense that SBI booked of 7,100 crores on the back of the increase in pension liability, and this is definitely going to be a one-time expense as mentioned by management also. So apart from this, if you look at the asset quality, deposit growth was almost at 13%, advances growth was almost at 14.5% on a YY basis, which was actually healthy in line with what the management had also guided for the growth. And lastly, when we talk about the asset quality, the gross NPAs declined almost to 2.42%, which was a decline of 13 bips on a quarter-on-quarter basis, and net NPAs were also stable at 0.64%. So actually, it was actually on a positive side for SBI that the asset quality is improving. When we also look at credit cost, that has also improved to 0.21% versus what it was at 0.22%. Slippages, when we talk about the 9-month FY24 slippages, were actually down almost by 3 bips to 0.57%. And lastly, when we talk about profitability, net interest margin was a bit down at 3.22%. It was a decline of 7 bips on a QOQ basis. But if we look at 9-month FY24 net interest margin, it was all at 3.28%, which was actually in line with what the management had guided. And on back of this result, if we talk about the brokerages also, now they are also being a little bullish about SBI, because when we talk about Nomura, they have maintained buy rating and hiked the target price to 755 rupees, because they also believe that the loan growth was actually actually strong, and NIMs were a little softer, but that won't be an issue for the bank. When we talk about Jefferies, they have also maintained TP at 810 rupees per share, because they believe that the uptick in loan book is going to support the growth for the bank going ahead. And lastly, when we talk about Axis Capital, they have increased the target price to 800 rupees per share while maintaining buy rating, because they also believe that the capital adequacy is comfortable at these levels for the bank for the growth. So all in all, brokerages are being bullish about the results, although it missed its target on the profitability, but I think the bank will be able to sustain the growth from here on.
We'll see what happens for SBI going ahead, but let's also listen in from the SBI Chairman, Dinesh Kumar Khara, as he explains the rationale behind the one-off. He also adds that the provisioning looks comfortable for the fourth quarter and they expect to maintain margins at the current level going ahead. So listen in to what he had to say.
We have actually taken care of all the outstanding liabilities, and even that has also been provided. And this quarter itself, we have already provided about 8,000 crore. But this quarter, we have provided about 6,000 more crore on account of this differential between 10 and 17 and 14 and 17. So actually speaking, if we look at these numbers, profit numbers, they are net of whatever are the likely obligations on the part of bank on account of the salary increase, on account of increase in pension. So all this will be behind us. Only 5,400 crore worth of additional provision would be required. So if you really look at it, 7,100 plus almost about 6,000 odd crore, about as against 13,000 additional provision which we have done in this quarter, we will be required to provide only 5,400 crore in the next quarter. We are not expecting any further increase in the deposit interest rates. So with that kind of a situation, I hope that we should be in a position to, though our deposits went up by about 10 basis points, deposit interest rate on the fixed deposit went up on an average by about 10 basis points. But we have seen as far as the NIM compression is concerned, it is somewhere around 3 to 4%, 3 to 4 basis points. So from that point of view, I think we have been in position to contain the compression in the NIM to a larger extent. And I expect that going forward, we should be in a position to maintain similar NIMs. And maybe a small dip here and there could not be forecasted, but nevertheless, I expect somewhere similar NIMs.
Well, that's the word coming in from SBI, but on to Tata Motors then. And Tata Motors reported a healthy set of numbers for the third quarter. Revenue was in line with expectations. But when you look at the profit after tax as well as EBITDA and margins, they all surpassed estimates. In fact, JLR business stole the show yet again, and the automaker said its JLR margin has more than doubled compared to the same quarter last year. So let's go across to my colleague Srishti, who's standing by with an update of what else the major reported as well.
Well, yet again, a great show by Tata Motors, and the showstopper was clearly the JLR division, which delivered another great set of performance, especially in the terms of the EBIT margin, which clocked in at 8.8% for Q3 FY24 versus our estimate of just 7.4%. And not just that, if we look at the JLR free cash flow as well, and that's coming in at a whooping £626 million in Q3 FY24, and that's almost double what the company reported in Q2. So across the board, we are seeing great performance by the company, where the company also highlights that all the three cylinders of the company, the JLR, PV as well as commercial vehicle business, is doing well, and the demand momentum is seen to be sustaining. Let's take you through the numbers then. Revenue has seen a jump of 5.2% on a quarter-on-quarter basis. EBITDA has been up by 12%. The margins on a consolidated basis has also improved from 10.9% to 13.9% on a YOY basis, and that indeed is better than what we were expecting. And lastly, onto the profit figure, versus our estimate of 4,660 crores, the company delivered 6,952 crores in terms of the profit. The net automotive debt has been reduced by 9.5 crores, and this is now standing at 29,200 crores. If we talk about the other positive, then the company does say that the guidance given by the company in terms of the debt reduction, other than that, the free cash flow generation, they are on track to deliver on that. And just a point, for their JLR EBIT margin guidance, the earlier guidance was to achieve 8%. Now the company is confident that for FY24, the JLR EBIT margin could be above 8%. So that's indeed another positive. On to the other segmental performance, the outlook for the commercial vehicle business is that it's expected to improve in the Q4. The bus segment is seeing a good demand. But from the passenger vehicle segment, the key highlight was the EV business EBITDA margins pre-R&D spends were near the break-even point, and the company is positive that in the times ahead it will turn out to be a positive number. So across the board, good set of numbers coming in from Tata Motors.
As far as that business is concerned, the small commercial vehicle business, we have split the business into two, where the trucks business is managed separately and the small commercial business is managed separately within the commercial vehicle business. And as we pull that together, I think the focus on a B2B2C compared to a typical B2B business that trucks are will mean slight different in approaches to how we go to market with that. That work is underway. And we are pretty confident that as we get that sorted out, as well as ensuring that we get the financing lined up and the overall market pickup happens, this business should come back on track again. But given that it's a shift in the way we are approaching this whole space, it will take a few quarters, 1-2 quarters more for us to get this back on track.
Alright, that's the word coming in from the management at Tata Motors. But with that, we'll slip into a very short break on this edition of Market Cafe. We'll be right back with more stock-specific news, so stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at what the Finance Minister had to say about Paytm. And Finance Minister Nirmala Sitharaman talked about the concerns ailing Paytm. She says that they continue to value the fintech space, but the regulator is taking action to protect the interest of common citizens. Listen in to what else she had to say.
The regulator is taking an action. I normally don't comment on any one particular company or any particular investigation which is going on. India's contribution through the fintech is a big thing. We value it. We value fintech sector as a whole. If there are regulatory issues on which a regulator takes action, it's for that company and the regulator. I may not be able to speak on it at all. Just as I may not be able to speak on any one particular investigation which the ED does. They go on the merit of the issue. But this is about the banking side of Paytm, on which the regulator RBI is also coming in with public interest in mind. It's not the intention of RBI to, put common citizens who've got used to digital payments to difficulty. RBI is only ensuring that the right course corrections happen so that people are not affected. So I really cannot comment on that case, but regulators normally come in with public interest in mind. अगले 5 साल के अंदर जो हम प्रधानमंत्री जी बार बार कहते हैं, मेरे थर्ड टर्म में थर्ड लार्जेस्ट इकोनॉमी के और हम बढ़ रहे हैं. Many developed economies have well crossed the acceptable level of debt to GDP. And in that context, for us to be somewhere in the range of 80 and also be in the range coming downwards, to raise a red flag and say, is this a dangerous situation? And it is not a government which borrowed for no reason. We are handling debt, even today, making sure that your fiscal discipline is not lost and making sure that we'll reorganize ourselves. And the borrowing that we are announcing is far lesser than what the market expected us to do. So on debt, borrowing, we've been absolutely responsible. That's my first response.
All right, that's the word coming in from the Finance Minister. Let's get a move on then and talk about Indigo, because India's largest airline, Indigo, has registered a 5th consecutive quarter of profit in the 3rd quarter. Now, despite supply chain issues, the airline is confident of adding 1 aircraft every week to its fleet, enabling expansion and domestic and global routes. Now, ET Now Sumit Chaturvedi caught up with Indigo CEO Pieter Elbers in this exclusive conversation. Listen in to a chunk of what they had to say.
We're rather confident of our ability to deal with that situation. And even for the coming quarter, the 4th quarter of the fiscal year, financial year, I should say, 2024, we have given a positive capacity guidance of plus 12%.
Let's talk about yields, and the yields were highest ever in Q3. Now, what is the overall outlook as far as yields are concerned in the coming quarters? Also, do you think advanced bookings are strong enough to hold the Q4 level of last year as well as far as yields are concerned?
No, I think we have yields are always fluctuating on a seasonal basis, and high season and low season, and these fluctuations were there in the past and will there be in the future. At the end of the day, yield should be a reflection of market demand and capacity supply, but also should be adequate in order to make investments for airlines and continue to build a sustainable business. We're confident about the market growth itself. I think in the recent event in Wings, the announcements were shared, and the government predictions were shared of doubling the market size from today's 150 million to 300 million towards the end of the decade. Also at Indigo, we have basically announced to foresee a doubling of our airline and company towards the end of the decade.
Peter, despite some flight cancellations, overall domestic traffic, if you talk about the market as a whole, domestic traffic was up 5% while global was around 40%. Now, do you expect this to continue or become better in Q4? What is the outlook for that?
You know, there is a rather than a quarter over quarter, let me take a step back. And aviation in general in India is still, I would say, at the early stages. The penetration as an overall percentage of people flying domestic, international, is relatively limited compared to some other parts of the world. So that just speaks to the enormous potential to further grow.
The free cash on books just keep on increasing. It's 19,200 crore, around that figure now. When do you plan now to reward shareholders? Also, any plans now for dividend or share buyback that you might consider?
You know, we have a couple of initiatives taken when it comes to diversify some of our financing. I think you've seen that also in the elucidations. And what is important, and that's where today was an important milestone really, with the results of this quarter, we are now turning into a network positive company.
And Air India, now it plans to add significant capacity in 2024. How do you plan to protect market share?
Air India is doing their thing. Of course, we look what our competition is doing, but we are not guided by a pure drive for a certain market share. The market share eventually is an outcome of different dynamics. And I think what's important for us is we have a capacity outlook, we have a market outlook, and at Indigo, we put our best foot forward to deliver that. I think over the last couple of quarters, we've demonstrated that we're able to do that, and we continue to do so going forward. Overall, the fact that also Air India expands is, I would say, just underlining the potential and the growth of the Indian market itself.
All right, let's get a move on from that then, and let's take a look at all the stocks that could be in focus today on the back of earnings or other news updates. My colleague Ashesha is standing by to take us through that list. Ashesha, good morning. Take it away.
Well, yes, first up, let's talk about KPI Green Energy, and this counter will be in focus on the back of order wins. The company said that they've won new orders in solar power project worth about 15 megawatts. On the back of this order win that has come through, this counter will be in focus. Meanwhile, let's also talk about Tilaknagar Industries, where the company has gone ahead and informed the exchanges that Income Tax Department has conducted searches at company's offices and premises under Section 132 of the Income Tax Act. On the back of this announcement that has come through, Tilaknagar Industries will also be in focus. Meanwhile, let's also talk about Borosil Renewables, where the company said that the board of directors is scheduled to meet on the 7th of February to consider fundraising plans, so keep an eye out on this counter as well. Meanwhile, HG Infra, on the back of order wins, will be in focus. The company said that they've received letter of acceptance from Indian Railway for an order worth over 700 crores. Aurobindo Pharma, remember this news came on Friday. It's an important news where US FDA has conducted inspections at company's wholly owned subsidiaries manufacturing facility, which is located in Telangana, and the inspection has been closed with 9 observations. This is an important announcement with respect to Aurobindo Pharma, and the company also said that they will be stopping manufacturing at this particular facility to conduct holistic investigation of this news flow that has come in. Keep an eye out on the back of this news flow. Meanwhile, let's also talk about Signature Global. The company has signed joint development agreement for developing 21.3-acre land parcel. It has overall developmental potential area of about 3.22 million square.
24 to pan out. Let's hear it from the management of the top automakers in India.
Increasingly, we found that mobility is about confluence of several partners coming together. For example, we have cars, we have battery technologies, we have flex fuel or ethanol or biofuels. We have so many technologies, and we have all of these on display. So we are very excited about this show today. So as you know, electrification is a family of technologies. We certainly have a battery electric vehicle that will have production this year in 2024 itself.
I think 2024 would be more of a year of consolidation for us. Last year we did a growth of around 8%. We grew our new car sales, we grew our used car sales by almost 15%. We grew our network by almost 25%. So it was a year of where we wanted to increase our footprint and also increase our relevance in the Indian market. Now taking those gains forward in the year 2024 is our strategy. This year our aim is to grow by another 15 to 20%. The Virtus has already taken a leadership position in the sedan segment. It was the highest selling sedan in the country in December.
No, surely we are. It's a special year for us. We are completing 30 years in India this year, and this has to be a special year. So we are launching 12 new cars, 3 new EVs into the Indian market. So we are fully committed, and of course many of them would be localized. We are today making 14 cars in Pune in our plant in Chakan. 97% of the cars we sell in India are all made in India cars, fully produced and assembled in Chakan in Pune.
See, I think at MG we are turning a corner as an overall organization, and I think you will be pleasantly surprised that today all the hard work over the last few years and months in terms of post-COVID times has all come together now into what I would say is our direction of 2024, where we are looking at an upward journey now. We have just announced today, a very, very attractive revised pricing of our vehicles, which has been a result of all the work of localization, the result of transportation and logistics cost negotiation, commodities, long-term contracts, freight, all of that put together.
All right, now let's shift focus from autos and let's talk about UPL, because that company reported a rather dismal set of Q3 numbers. So let's listen into what the con call takeaways are, rather discuss what the con call takeaways were from the management, and they expect restocking to begin from mid-2024. They're also expecting sequential margin improvement in Q4, and they're saying that the Q4 channel inventory is likely to improve. Also, the word coming in is that they expect Q4 to be weaker than last year, and price challenges will sustain in early FY25. That's the word coming in from the management. Now, they're also saying that they expect rebates and returns to normalize going ahead, and they're also on track to reduce the SG&A, which is the selling, general and administrative expenses, by 100 million in FY25. They're saying that the minimal impact from high cost inventories into FY25, that will have a minimal impact, and they will also be announcing a rights issue of 5,000 crore rupees going ahead. So that's going to be one key point to focus on, and they're saying that the proceeds from this right issue will be used to pay off debt. Now let's talk about the net debt snapshot when it comes to UPI. At the end of FY24, their net debt looks to be around $2.5 billion, and post the right issue, they expect this net debt to come down to $1 to $2.2 billion. So, well, lastly, that's the key takeaways coming in from the con call of the management of UPL.
Well, with this, it's curtains down on this edition of Market Cafe on ET Now. From me, Shreyanshi Singh, my co-anchor Snehi Shah, as well as the entire team that put the show together. Thank you so much for watching. But you don't go anywhere, because the market takes the action forward.